The global economy is entering a new phase, marked not just by competition for growth, but by strategic positioning in a world that feels increasingly uncertain. In this climate, money doesn't simply follow fundamentals, it follows risk, narrative, and power. In the Forex markets, the US dollar is likely to maintain its dominant position, not solely because of domestic strength, but because of its continued role as a global anchor during instability. However, its dominance will face more frequent challenges, particularly from regions seeking greater monetary autonomy. The euro and yen remain vulnerable to sluggish growth and internal divisions. Emerging market currencies face rising debt service costs and political unpredictability. Interventionist tactics, such as rate manipulation or capital controls, are expected to become more frequent as nations attempt to manage growing volatility. Crypto assets are entering a critical junction. Bitcoin, in particular, is increasingly viewed not just as a speculative asset, but as a geopolitical and technological hedge. As centralized systems grow more controlling, through policy, surveillance, or digital fiat systems, there will likely be renewed attention to decentralized networks. Altcoins will fragment, with many losing relevance unless tied to real-world use cases or privacy infrastructure. Meanwhile, CBDCs may accelerate globally, promising efficiency but often introducing new constraints. Gold remains a historical constant during uncertainty. Its appeal continues to rise, not just from investors, but from states accumulating reserves in anticipation of future financial realignments. Central banks across multiple regions have been steadily increasing gold holdings as a way to diversify away from fiat dependency. Supply constraints and increasing sovereign demand will likely drive long-term pricing pressure. Across all three asset classes, Forex, crypto, and gold, there is a shared theme. Markets are adjusting to a world where conflict, fragmentation, and rapid policy shifts are part of the new normal. Traditional investment strategies based on stability and long-term projections are giving way to more fluid, reactive approaches. Those who can track sentiment, power dynamics, and capital flow constraints will navigate this transition more effectively. This is not the end of markets. It is the beginning of a different logic governing them.
Sources/reasoning. USD dominance during global volatility. Historical flight to dollar in crises. Structural pressures on euro and yen from energy, demographics, and stagnation. Emerging markets impacted by global rate cycles and commodity-linked unrest. Bitcoin's increasing relevance during sanctions, capital restrictions, e.g. Russia, Argentina. Growing CBDC rollout and surveillance concerns. China, Nigeria pilot programs globally. Central bank gold accumulation trends. WGC data, 2022 to 2024. Shift to narrative-driven market behavior in the social media and AI trading era.